This is the Washington State Single-Family Residential Housing Report for the month of July 2024. We'll be reporting on 3 of the most populous counties comprising the Northwest Multiple Listing Service. Those are King, Snohomish, and Pierce counties. We have data for all 26 counties contained within the MLS, so if you want that information, feel free to contact us. We'll be moving quickly, so pause or rewind the video as necessary. MLS reports their monthly data in the first week of the following month. Therefore, a lot of what we'll report on in this piece will be pertaining to June statistics. However, we'll be referencing historical data and discussing how this can help us in forecasting future home price movement with increased accuracy. Moreover, we'll be reporting on weekly data near the end of the video as well, thus the July Housing Report headline. 17 of the 26 counties comprising the Northwest Multiple Listing Service saw year-over-year median price gains. The most densely populated regions saw increases. Keep in mind that less dense population centers concede wild swings in the data owing to the rule of low numbers. In summary, the rule of low numbers, as we're defining them here, is a fundamental concept in probability and statistics, asserting that decreasing the number of observations increases the uncertainty of the average outcome. Additionally, Clark County has a separate MLS as well, and sellers' agents don't always report their listings in the NWMLS. However, as we say in all these videos, total active listings are the premier indicator of future home price movement, and total active listings have a negative correlation to median prices. When active listings are rising, it's only a matter of time before home prices begin to decline. And single-family residential total active listings were up this month in every single county under the NWMLS umbrella. And as active listings rise, we can expect months of inventory to rise as well. Remember, the industry standard in determining a neutral market between buyers and sellers is 5 to 6 months of inventory. If the supply is 4 months moving towards 6 months, then it is said we're transitioning into a buyer's market. So if the supply is 6 months moving towards 4 months, we'd be progressing into a seller's market. Note that for the time being, we're still in a solid seller's market in the most populous counties, King, Snohomish, and Pierce. This is the current situation in the overall county markets, but as we'll see, not all map areas perform according to the county medians and averages. We should note that what determines whether a cell is colored green or red is how it performs against the county's total. We'll start in King County to illustrate what we mean. MLS breaks King County into 6 main regions: the East Side, Urban Seattle, North King County, which is just north of Seattle, Southwest and Southeast King counties, and Vashon Island. We first compare the individual regions to the overall King County statistics. If you've seen our first video, Can Home Prices Be Predicted?, then you know total active listings are the best indicator of future price movements. The correlation is a negative one, which means as active listings continue to rise, home prices will eventually decline. Generally speaking, there is a lag effect of some 7 weeks, give or take, depending on market stimuli. The second best indicator of future home price trajectory is months of inventory, which appraisers are required to analyze in their appraisals. It makes sense that months of inventory would rate high as a home price barometer, as the equation to arrive at the sum is total active listings divided by closed sales. Ironically enough, closed sales rank 5th out of the 6 indexes measured in determining the best cue for future home price trends. Pending sales are a valuable prognosticator as they're a forward-looking indicator, as are new listings. In fact, we measure the ratio between new listings and pending sales against past patterns to give us an inclination about future home price direction. We'll reference this ratio further in upcoming videos as we likely won't have enough time to cover the equation in this piece. We tally up all the indicators and use them in our scoring system, which ranges from 4 to -4. 4 being the best score and -4 being a hot potato, depending on one's point of view, I suppose. Looking over the recap statistics enables us to quickly compare the individual counties to one another, while examining the regional county figures helps us identify hot and cold spots within the individual counties themselves. Scaling down even further to the individual map areas and adopting the same scoring system we use for the regional numbers provides us with an even more comprehensive perspective of the data. We can instantly see which map areas are performing well and which are struggling. We'll likely revise this scoring system as time progresses, but for the time being, this arrangement puts us well ahead of the competition when it comes to knowing where to look for opportunities. You can imagine the power this kind of proficiency could bring to investors, flippers, or buyers who just want to own a home of their very own. For instance, we referenced the Skyway area in Renton in our last video and noted that vicinity had seen total active listings rising every month year over year, going clear back to December. We called out the Skyway area because active listings had risen a whopping 412.5% in May, and yet the region's median price still had risen 32.26%. Also in that video, we stated when prices and active listings rise in tandem, it's only a matter of time before one of those variables begins to decline. Well, this month the Skyway area saw active listings again rise more than any other MLS map area, 182.35%. And Skyway's median price fell for the first time this year, minus 3.15%. Moreover, Skyway is now the lowest price map area in MLS in the month of June. This is the strength of forecasting analysis. Predictive modeling is not 100% flawless, but it can improve one's odds of correctly diagnosing market trends. The Dash Point Federal Way area is another map area we want to keep a close eye on. This region saw the second biggest rise year over year in active listings in June, up 127.91%. This zone's median price was up 26.81% in June, again year over year. But with such a prodigious jump in active listings, we'll want to monitor sectors such as this very closely. Again, we're in that time of year in which active listings begin to peak, remain elevated through summer, and into early November. We also referenced Area 560, Kirkland Bridle Trails, in our June housing report. We said the East Sides area with the third highest median price recorded a large rise in active listings of 55.56% year over year. Expectantly, active listings rose 40.30% again in June year over year, while pending sales fell minus 1.49% during the same time period. Still, median prices rose year over year in Area 560 by 24.4% in June, but pending sales fell 44.62% month over month. And as we know by now, active listings cannot continue climbing at a brisk pace for long while median prices continue rising year over year as well. So, we'll want to keep a close eye on Area 560 as that region has been in the top third for the past 3 months for the fastest rising active listings of the 29 King County map areas comprising the MLS. In complete contrast is Mercer Island with the second highest median prices in King County. Mercer Island was the only map area in King County to report a drop year over year in active listings in June, down 2.7%, while at the same time pending sales rose on Mercer Island 19.23%. So supply is falling here as demand is increasing significantly, and that is a recipe for higher prices. Mercer Island's June median price is $579,500 higher than June's median price just last year. The new listings on the island in June were up 10.53% year over year. So, as you can see, anywhere active listings are substantially below their county average, while pending sales are simultaneously well above their county average, this is a formula for prices to continue increasing, at least until an equilibrium between supply and demand is reached. Remember, the cure for high prices is high prices, and the cure for low prices is low prices. Let's examine some other King County areas that are performing above average. Area 540, east of Lake Sammamish, and the region known as the Sammamish Plateau, has relatively low active listings compared to King County overall and a proportionately high year-over-year number of pending sales. In addition, Area 540 has the second lowest months of inventory in all of King County at 1.09. This locale has been performing quite well recently. Area 540 also bumped Area 530 out of the fourth highest median price position. Area 530's median price in June was $55,000 lower year over year, while Area 540's median price rose $255,200 year over year. We can't immediately tell the reasons for this without performing a deep dive analysis, but a quick glance at the data in this format tips us off that we might want to investigate further. Area 530 is Bellevue, east of 405. Other areas that performed well in June and might be expected to continue performing well in the short-term future are the east side, south of I-90, which is known as Area 500, Juanita-Woodinville, which is Area 600, West Seattle, which is Area 140, and Enumclaw, Area 300, which we told viewers in our last video had the lowest active listings year over year of all the 29 King County map areas. Consequently enough, Enumclaw's median price rose 8.82% year over year in June. Before moving on, we should note that Area 500 also bumped Area 530 clear down to the 6th position for highest King County median price, but only by $1,000. It'll be interesting to watch how Area 530 performs going forward. As it stands, Area 530 fell $82,500 month over month in June. While I said in the lead-in, this is the single-family housing report, I think it's worth taking a quick look at the recent condominium sales in King County before we move on to Snohomish and Pierce counties. The first thing to note is there are 30 MLS condo map areas, whereas there are only 29 single-family residential map areas. This is because Belltown in downtown Seattle almost never has any single-family residential sales to report, but ranks 7th for condo sales volume last month. Also, we limited the scoring system to only those regions recording more than 25 monthly sales owing to the rule of low numbers. Area 390 with the most sales volume this month, 96 sales, had the worst possible score, a -6. We've added year-over-year new listings to the condo data. Area 390 is central Seattle, and inventory is growing quickly here while demand shrinks away. We're looking for significant price reductions and rents to decline in the coming months in this region, especially once supply exceeds 6 months. The Queen Anne Magnolia area's condo market is doing only marginally better than that region's single-family residential market. Here, active listings are elevated, up 101.54% year-over-year. The Redmond Carnation sector is another area we want to track going forward, as this region's total active listings are up 540% year-over-year. But median prices are still rising here. We'll look into the reasons for this in the coming months. At the opposite end of the condo market is Area 560, the Kirkland Bridle Trails area. This is striking because we just discussed how Area 560 scored in the lower one-third of the single-family residential market, but the 560 condo score is the highest. This is because frustrated homebuyers are settling for condominiums after losing out in multiple offer scenarios in the single-family residential markets. This is why the 560 median condo prices rose a mind-blowing 77.42% year-over-year in the month of June. You heard that right. Last year, the median price for a condominium in Area 560 in June was $660,000, but this year the median June price for a condo is $1,170,979. That is an increase of $510,779 in just 1 year for a condo. This is why we wanted to share the King County condo data with viewers before moving on, to illustrate that the condo market is serving as a sort of pressure relief valve for the single-family residential markets. And as inventory continues to build in the condo markets, those seeking relief from the rising single-family residential median prices will offer less expensive condominiums. Now, let's take a look at the Snohomish County single-family residential market. Area 770, which is northwest Snohomish County, saw the biggest increase in median prices, up 12.45% year-over-year in June. Area 770 also recorded the lowest median prices in Snohomish County last month, $708,443. Again, this shows buyers are seeking relief anywhere they can from ever-increasing home prices. 2 of the 6 Snohomish County map areas saw new listings fall year-over-year. Area 760, which is northeast Snohomish County, had new listings fall the most, -6.9%, while Area 730, which is southwest Snohomish County, had new listings falling -3.35%. Area 730 is the second most expensive housing market in Snohomish County, behind Area 610 by $235,000. Area 610 is southeast Snohomish County. That median price between Area 610 and 730 fell $127,500 just since last month. See how this works? One area rises in price too much too fast, and demand seeks refuge elsewhere. We'll say it again. The cure for high prices is high prices, and the cure for low prices is low prices. Snohomish County's months of inventory in all 6 regions is under 2 months. Area 760's months of inventory is the highest at 1.98 months. However, new listings coming to market are the lowest in Area 760 at -6.9%. Area 760's year-over-year active listings are also below all of Snohomish County's year-over-year figures. Considering Area 760's new listings are the lowest year-over-year in all of Snohomish County, we should expect to see active listings fall even further year-over-year. If this trend continues through summer and into fall, and that's a big if, then we could expect to see Area 760's median prices pop in early spring. But we have a lot of ground to cover between now and then. Area 730 is the only other Snohomish County region to see new listings fall year-over-year, -3.35%. Closed sales also rose 21.85% year-over-year here. If this course were to continue, the months of inventory would fall and median prices would continue rising. Months of inventory is calculated by dividing active listings by closed sales and are our second best indicator at the moment for determining future price movements. Area 610 has the highest median price of the 6 MLS regions in Snohomish County at $1,160,000. This is down $22,500 month over month and down $85,000 compared to April's year-to-date high of $1.245 million. The all-time median price high for Area 610 was in March of 2022 at $1.298 million. June's median price is $138,000 lower than March 22's all-time high. However, Area 610's June median price was up 4.4% year-over-year. Still, pending and closed sales were both down in June, while total active listings and new listings were up. And we all know by now that will almost certainly increase months of inventory and put further downward pressure on median prices. Area 610's score for the month of June was the worst in the 6 MLS regions in Snohomish County. Year-over-year median prices through the remainder of the year will tell us what to expect next spring, when prices typically peak in this region. In Pierce County, the Parkland area has the best score. Year-over-year active listings are lower than the county average, and new listings were down year-over-year in June minus 16.46%. Only Southeast Tacoma had fewer year-over-year new listings at minus 21.13%. Parkland also recorded the highest year-over-year closed sale figure at a compelling 46.67%. That's 51.8% higher than the county average. Total active listings were 7.6% lower than the county average in this region. So, with new listings falling year-over-year and closed sales simultaneously spiking, we'd expect to see months of inventory fall further than it already is, at 1.21. Parkland's month of inventory is already the second lowest in Pierce County, just behind Lakewood's supply, which stands at 1.16. At the opposite end of the extreme is Browns Point with the lowest score. Here, active listings rose 62.86% year-over-year, while closed sales fell in tandem with a year-over-year decline of 9.52%, 4.39% higher than the county average. Expectantly, the Browns Point region has the highest months of inventory at 3 months' supply, and we expect that drift to continue through summer, fall, and into winter. Time will tell. As you can see, the Pierce County regional map areas break down into further multiple individual map areas. We won't itemize these map areas further, but if you want this information, we have the data plugged into our models. Just reach out to us and we'll get you a more detailed analysis. These videos are time-consuming, so if you find the information helpful and useful, please consider helping us out by subscribing to our channel, liking, commenting, and sharing. Your assistance would be greatly appreciated. Thanks for watching. We always appreciate your time.